being bullish when everyone else was quite fearful at the time works as well. And just be optimistic, that's the main thing sometimes. And if you can, so that's one point. So the real two ways of trying to buy a deal in today's market is, number one, solving a problem that other people can't solve, but number two is finding an angle that other people haven't found.
You realised that you wanted a certain level of growth that wasn't potentially achievable with the way you were doing things. Welcome to another episode of the Property by Kazy podcast, your favourite property podcast. Says I, because I don't know if I'm going to get taken to court by one of these rich developers. However, we are back like we are each and every week with an amazing guest. Saif, how you doing?
Yeah, all good. Thanks for having me.
Good. So if you haven't already, you know what to do. You know, you've got to do all the good stuff. You've got to like the video, you've got to subscribe, and you've got to turn on those post notifications so make sure that you don't miss any of our upcoming episodes. So as I mentioned, we're joined by Saif. Had to remember the pronunciation with Saif, which is I cannot forget. But for those that don't know you, where are you from and what do you do?
Yeah, so I'm actually based in the East Midlands, so Lincoln predominantly. We invest up and down the country, we buy and sell properties up and down the country, and then we kind of got a management company as well to help us basically manage the properties up and down the country. But yeah, I kind of started out my life as a pharmacist, so back in 2013, graduated from Brighton, did about a year's just basically qualification, worked as a pharmacist, absolutely hated it, I just couldn't take it whatsoever, and then decided, right, I'm going to do something about it. And yeah, that's when I set up a pharmaceutical trading company to start off with. So started trading pharmaceuticals, and similar to kind of trading property, you kind of make a bit of money from it, and then you think, what next, really? So I kind of then decided, right, next step is put that money just to sustain it for the long term into property and
what was investing. It about property that made you say, look, I've spent, because how long did it take you to qualify as a pharmacist?
About a year to qualify, but 4 years to study it.
Hold on, before we get into the rest of the podcast, a quick note from our sponsors, London Mortgage Solutions, our tried, tested and recommended property finance brokerage. Whether you're looking for bridging finance, buy-to-let mortgages or commercial mortgages, these guys have got it all covered and will give you great advice. They can also arrange both residential and life insurance. They've helped myself as well as many of my listeners already, so if you want to find out how they can help you, click the link in the description below.
So 5 years in total.
5 years to qualify, to become, qualified pharmacist. But what was the step that once you said, maybe this isn't for me, why did you sort of gravitate towards property as an investment vehicle?
Yeah, so I guess, my dad was a landlord back in the 70s in London, so prime London, Bayswater, sort of Marble Arch, those kinds of areas. He went through the 1970s period. I mean, we're talking about 1% interest rates today. He was at, 15, 16% interest rates back then. And I think that hit him hard as well, but it was just the fact that he was in property. He's always sort of ingrained it into us. And I thought, okay, this is quite tangible. I wasn't going to say it was easy, but it was easier to understand than stocks and shares and all the other investing that you've got out there. So for me, it was very straightforward of buying it at a certain price, renting out at a certain price. That's your yield. That's all I knew back then. So yeah, I just thought it was straightforward and something that I can sort of look at tangibly and feel as well tangibly.
And then when you first wanted to get into property, was it buy-to-let? Was it HMOs? What was it that you first got into property?
The first property was just a simple 2-bed flat. It was a buy-to-let. It was in Salford, actually, just north of Manchester. So just a simple, straightforward buy-to-let. The second one was a student HMO.
Okay. And what was the difference of managing a single buy-to-let? Because I think a lot of people are drawn towards the attractions of HMOs as supercharged buy-to-let, going to make you a lot more cash flow, higher yield. But I think people don't often speak about the downside or the negatives of a HMO. Did you find them at all? What was the experience like?
Yeah, so I'm quite an optimistic kind of guy. I don't really want to talk about the negatives necessarily. However, just to point out, so I think for me, HMOs were very much, if you were going to get up to 5-10 HMOs, you can probably manage them. They're very much more intensive. So that could be a nice little business for someone where they can earn a nice little income. For me, I was wanting to go beyond that and kind of scale even further. And I quickly thought that this is probably not very scalable in terms of what we were doing anyway. So for me, it was, how do you basically go from here to 100 properties? And it makes you just think much bigger. I think that was the whole point. It was like thinking much bigger. And then I thought, HMOs are not going to help me with what I'm trying to do at this point. Single lets were great because obviously you don't have the headache of managing them like a intensive HMO. However, The real middle ground holy grail for me was flats, blocks of flats. You've got economies of scale with them, you've got really good cash flow in terms of income, not as much as a HMO, not as little as a single let, but you've got that nice hybrid in between where it doesn't require as much management as a HMO. So for me, that was the real holy grail.
Okay, and in terms of, you know, sourcing like unbroken freeholds and blocks, how did you go about that?
The first thing I did, in all honesty, was just literally working with agents. So I really put my money where my mouth was. I bought property from an agent and I used that to build up the relationship, because I find, and especially in today as well, if you go try and build up a relationship with an agent, they don't know who you are, you've not transacted with them. They're not really going to entertain any kind of conversation with you. They'll start to take you seriously when you transact with them. So I started to transact with a few of them. It wasn't the best deals in the world that I started off with, but it's got me going, right? And it made me start. So as we started to go along, I got better and better relationships with them. I then got better and better relationships with auctions. So I started to look at auctions as opposed to agents, started to buy some stuff from auctions. The auction house managers started to realise that we were transacting and basically just doing what we say we were going to do. Even on properties that you couldn't view, they were quite problematic. And then they started to say, well, you know, I got this through and I need to basically value it for auction. Would you give me a trade price on it? That was literally how it started. Give me a trade price on it. Gave them a trade price. They said, look, we can make it work. And I started buying a lot of this stuff before it even got to auction. I quickly realised that where is this stock coming from before it goes to auction? And a lot of it was coming from cash buying companies. We Buy Any Home, Property Buying Company, all the standard kind of big ones, to name a few. So then that got me intrigued and I thought, why don't I take control? So what happened is, if you remember 2019, 2020, we had that Boris bounce back beginning of 2020. It was really difficult to buy. Then obviously we had COVID and then it got difficult to buy again. So I thought, I want to take control over this, because they didn't get as much leads coming through. And we basically all of a sudden went from loads of leads to no leads coming through. So I thought, right, to control this, I need to set my own cash buying company up, researched it, understood it, and we kind of really launched officially at that point.
Okay, that's a lot. I think there's a lot to unpack there. I think one of the things originally that you said, and obviously it worked for you on a much larger scale, but even on a smaller scale, I think when we speak to agents at the moment are saying that we've already got a list of 20 people that we work with, whether you're trying to source rent-to-rent deals, whether you're trying to find HMOs, whether you're trying to find properties to flip. It is a seller's market in that there is a lot of buyers. So when you're trying to build relationships, like, yes, it's great to have a good online presence. It's also great to, you know, be personable and build relationships. But when the market is as hot as it is, you know, actually doing business and walking the walk as opposed to just talking the talk becomes imperative. And I think you touched on that when you said sometimes you don't have to buy the best deal, but buying a deal is what will potentially facilitate a much better deal coming to you in the future.
Yeah, and just remind me, because when we talk about trading, there's a really important point I'm going to be making about this. But I'd say probably the biggest thing when you're looking at it from an agent's point of view now, and this is where we had that mind shift, that mindset change, was rather than saying, do you have a deal for us? It's basically, what is a deal, first of all? So defining that. And then beyond that, we had to go to a point where we said, right, all they were doing was just sending us loads of properties that needed refurbishment. And we said to them, no, just to be very, very clear, all we want you to do is just send us the problematic properties that are on your books. Anything with a problem, a tenanted property that the tenant's not playing ball and doesn't give you access, that's great. That comes to us, because the stuff that is hot will sell. I don't want to get into any bidding wars. I'm not going to waste my time with that, because you will end up wasting time viewing. And as soon as an agent calls us and tells us there's a deal, we're like, how many viewings you got? Oh, 30. Just forget about it. We're not even going to entertain. It's just a waste of time. And if you want to optimize your time, because we don't have all the resource in the world, I just say to them, anything that you have a problem with that you can't solve for whatever reason, come to me. I'm pretty sure we can solve a lot of your problems.
Yeah, and I think that's something that we spoke about, like some of the most recent deals that we've done and other people, but particularly in a market the way it is now.
Yeah.
You know, just being a cash buyer isn't necessarily enough, or just being able to be happy to deal with the refurb or to use bridging finance, you know, isn't going to be enough. And if you go to somebody and say, look, let me get a deal, because it's been identified as a deal, it's been identified as potentially something that has the opportunity to make money. Yeah. Everybody wants to make money. So because of supply and demand, the price is, like you mentioned, for a bidding war is pushed up to the point that it's, well, who's willing to do it for the least profit, as opposed to you defining the amount of money you could potentially make from said deal. Whereas if there's a problem that you can solve, you firstly got less people. Well, if you've got a problem, day one, you've got less people that are interested. Yeah. If you can solve the problem, you then create the value. So it's not necessarily a deal, but you turn something that was an issue into an opportunity.
Yeah, and if you can, so that's one point. So the real two ways of trying to buy a deal in today's market is, number one, solving a problem that other people can't solve, but number two is finding an angle that other people haven't found. So we were chatting obviously before we started filming about, you were talking about Croydon Council and what they do and don't want. So if you've got that knowledge, you can find an angle before other people can.
Yeah.
So you've got that first mover advantage basically over people.
And you see, because your GDV is completely different.
Yeah.
So if somebody's looking at, I don't know, we take a different council, we take like a Southwark council, for example. They're not interested in conversions. You can find somewhere that meets all of your national planning standards, but they'll look at conversion and say, nope, we've got an oversupply of flats and undersupply of family homes. But then if you then know that, okay, but they're actually fine for you to split the larger flats because into separate units, your GDV looking at maybe a flat that's 120 square meters is completely different from somebody who's just looking to refurb it versus somebody who's going to turn it into a 1 and 2 bedroom flat. And it's creating the value as opposed to just, because if it's common knowledge, everybody knows that if you refurb this flat, it's going to be worth £700,000. But if you have that additional expertise, if you can split the flat, and of course there is additional planning risks and associated risks with that, but potentially you're going to add 300,000 to the GDV, you could even overpay potentially if it was a hot market in comparison to other people, but not in relation to the end value.
I think just on that specific point, I think that's probably one of the best points you've raised is rather than going for stuff that's got planning, because everyone's going to put their numbers based on that, go for stuff that's got planning that you can either find another angle on or that doesn't have planning, you're taking the risk, but that risk is going to be mitigated by your local knowledge or your planning consultant, or the whole power team, I guess, behind you to try and mitigate that risk as much as possible.
Yeah, I think, everybody, but I think as from a top level, it depends on your attitude towards risk.
Yeah.
Because if you're super risk adverse and you like to play safe, you would be happy to buy something with planning, knowing that potentially your return on capital might only be 15%. But because away from, there's always risk with any investment, but you can mitigate and manage a lot of the risk along the process, potentially from the type of contract you sign with the builders, down to buying something with planning. But in most cases, when you buy stuff with planning, the person who's gone out there to get the planning and spend their money is going to know exactly what it's worth at the end. So they're effectively going to determine how much money they believe you should make.
And they've made the money already because they've got the planning. And I think that's the biggest thing, is that most people think as a developer you make your money on the build, but actually you make your money on the planning, then you make money on the build as well. So the reality is you've got a two-step process to make your money.
Yeah, I think, well, as a starting point for me, I even take it back further. You make it when you buy, because even if you,
that's true.
The main thing is you make when you buy, and then you can step and stage the amount of money you make going forward. But if you buy at the wrong price, it doesn't matter if it's got planning, got no planning.
That's true, actually.
If you overpay, you've overpaid, and I think it kind of is the opposite to what I said about maybe not doing the best deal early on. But if it's safer and you can make a small margin to build relationships and be good. But I think it's all really about having a plan. And I think you touched on it when very early on, you realized that you wanted a certain level of growth that wasn't potentially achievable with the way you were doing things. And I think it is important to buy, to buy property to get on the ladder as early as possible. But if you're looking at becoming full-time in property, what you're currently doing, how does that align to your long-term goals? I think that's very important. And kind of taking it back from there, I just want to understand a little bit more about how you moved, because you, in that quick sort of like summary of what you did, it made it sound like you can go to university and be a pharmacist for a year, then say I don't like that, and then within a couple of years have a competitor for We Buy Any Home.
Yeah, that's true.
Where's the gap? How do we get there?
So the couple of steps is, so what I did, so being a pharmacist, the good thing was I could locum. So that was a stepping stone. So I went out of a full-time job into locuming, which basically meant I could pick and choose when I want to work. So effectively went self-employed. That was a great stepping stone. So everything is a stepping stone. That helped me to get into basically the pharmaceutical trading business. That was another stepping stone to get me into property. Now what I did was, that was providing my income, and I started just doing property investing, just pure property investing.
And that was funded through the trading in the
company, basically. So I was using a lot of that. So it was very traditional. I didn't do any of these, and I know a lot of people obviously go do a lot of education now, which is obviously, in hindsight, it probably would have accelerated what I did, but I didn't do it. But it allowed me to make my mistakes and learn from them. So I started to build up a property investment portfolio where I didn't need to take the income from it. And I think that was the key, is I didn't have to quit a job to do that. It was kind of like I was doing that on the side when I had my business. My business then, I looked forward and I thought, okay, this is not sustainable, because I saw, for various reasons, it's a very commoditized business. So the prices were going down, it was getting more expensive to produce the product, so your margin was thinning. So I thought, I've got a couple more years to really get the most out of this before I start really full-time into property. We scaled up a HMO portfolio to, I think, about 13 properties at that time.
And they were around Manchester, Greater Manchester
No,
area?
so sorry, these were all Yorkshire-based. So, and at the time, we bought them at the right price. We refurbed them. They were all singing, all dancing. But the problem that we had is we bought them in markets where they were very transitory. So someone would come in for 3 months, 4 months. And then once they lose that shine, because a lot of these people weren't paying deposits and everything else, it was difficult to re-let them out. So the start,
that same premium you had at the beginning.
Exactly. Yeah. So the start was brilliant, because the problem that we have in those kinds of areas is your price for a HMO per room is very similar to a flat, but with a flat, you pay the bill. So that was the real main difference. And whereas over here, say, for example, in London, it's quite a big difference.
Yes.
And there's that demand for the HMO rooms.
It can be 100% in areas.
Exactly. So then we quickly realised, right, what we're going to do at this point. So we decided, right, we're going to sell some of these HMOs. So what we decided to do was sell our best performing HMOs, because they were the ones that had the best income and everything else.
On a yield basis as just a going concern.
Yeah, and they're all new. So we thought now's the best time to sell them. Once they start to get old, people don't really want to buy them. So we sold them, we turned money over, and all of a sudden we went from no money in the bank to, oh, hello, trading actually is now starting to bring money in the bank.
We have money that we can actually actively invest into assets. So just quickly, with your HMOs, were you focusing on, it wasn't an Article 4 area? So was it?
No, it wasn't Article 4 area. So we were doing an Article 4 areas in Lincoln. It was all students. Article 4 came in, we started to look elsewhere, and that's when we started to look at non-Article 4 areas. And I think that's probably what also went against us, is anyone could go in there, create these HMOs, and basically...
And so you're under the 6-person threshold generally?
Exactly, yeah. So we didn't really go to sui generis at all.
Okay, fair enough. So you started disposing of HMOs because you realised, realistically, to get to your goal of maybe 100 units or a financial goal, that it wasn't going to get you there quick enough. So you disposed of them, so you then didn't have the assets, but you now were liquid.
Yeah.
So what was your first steps from being liquid?
The first steps we did was spoke to the auction houses that were trying to supply us the deals, and we said, look, we are very liquid and we're ready to go. Sent them the proof of funds, and we already had that transactional relationship already. So that's the key. It was a transactional relationship, and they knew that we can. And the way that we built our whole business and whole reputation is literally by doing what we're going to say we're going to do. So if you came to me and said, Saif, I've got this house, this is the address, give me an offer, and I gave you an offer, regardless of what happened, if I said to you, I'm 100% buying it, I'm buying it at that price, no matter what. I'm not going to chip you, because that's what a lot of the cash buying companies do.
And that's it.
They'll end up chipping. Whereas we built our reputation up by saying, we'll buy it at that, and we delivered.
And I think that is the same, and it is, for some people that are watching this, they may be thinking, okay, that's maybe a long way in the future for me, but the actual, the whole purpose behind it isn't just that if you've got a load of cash, it's the idea of integrity and doing what you say you're going to do. Like, because as soon as you deliver, you give somebody peace of mind that I can work with you, I can now recommend you. Because if you say you're going to turn up at 1 o'clock and you turn up at 1:15, and then somebody else asks me, like, oh, should I book him? Is he all right? I don't know if I can completely vouch for you. It's like, I could have been great, but there's something that's, potentially sullied some of the image or the reputation. So I think doing what you're saying you're going to do is really important for a number of reasons. Firstly, reputation deals going forward, but also, like, we're dealing with property that makes everybody along the transaction money.
Yeah.
So if you're gonna, come in and knock somebody for some money, and then the deal falls through, either the agent, the auction house, the owner of the brand, etc., could all potentially lose money. And when you start to affect people's pockets and bottom line, they stop wanting to do business with you. And
totally
that
agree.
Is completely the same that if you're looking to build a rent-to-rent portfolio, for example, and you're telling people to send you deals, and somebody sends you a deal and you say, I'm going to go ahead with it, without doing your due diligence to understand what you would maybe need to spend, and you work out your spend and say, oh, this one will be a bit too much. The first time you do that, is maybe the last time you get to deal with that agent, because they're like, look, you're a time waster and that's your reputation.
Yeah.
I think reputation in this business and pretty much in any business is.
But just on that point, and I'm not going to lie, at the start, we were looked at as probably these time wasters, when I say right at the start, because we probably got deals and we didn't transact because we didn't understand everything at that point. So that was when we first started out. And then the funny thing is we looked back at those relationships that we probably started off on the wrong foot at, and we went back and we explained everything. And then we were in the office with some of those agents, and some of them were commercial agents, which are some of the hardest agents to deal with in the industry. And they looked back and they started to laugh and they said, look, this happens all the time. So even though you could be a time waster at one point, that's still okay, because you can basically say, look, you go back to those relationships and you explain what happened. But I'd say, if you can be conscious about it and avoid it from the first place, it would just excel everything.
It's okay because you allowed it to be okay because you did stuff.
Yeah.
But for some people, depending on your scenario, depending on available funds, available time, you don't always get multiple bites of the cherry and especially if you're in an industry where there's maybe only one big agent, there's one big supplier.
Yeah.
If you mess up with your primary supplier,
it's gone.
Then it's really difficult. But like you said, you just, if you do make mistakes, go back, you explain them.
Just be transparent. I think people love transparency. So what I always say is, if I've agreed something but I've not seen the legal pack, it's yes, I've agreed it, subject to. So if you put the word subject to, it just mitigates any risk from your perspective, because it's always subject to something.
Yeah. Brand new series with myself, Kaz from Property by Kazy, bringing together some of the best developers and development projects across the UK.
This is probably my favourite flat because of the challenges.
This property was purchased for approximately 980,000.
So we're now in the hallway of flat number 9.
We should be generating £4,250 per calendar month.
Yeah, we did a full rewire, full replumb, the boiler's over your shoulder, all the copper was gone.
You've got the flip deals, BRRR, ground up construction, new build houses, conversions, office to residential, you name it, we're gonna go and see it. So if you wanna see some of the best developments in the UK, subscribe right now.
So I think, you have to be transparent. There's sometimes little downsides in terms of, because you mentioned a lot of people come in and say I'm a cash buyer and say I can move really quickly and then sort of pull the rug last minute. And if you've been completely honest, people are driven by money. So be that the vendor or the agent that's looking at either their bottom line or the commission. So sometimes you do lose out on the deal, and it's just kind of balancing where you stand. So in regards to obviously being a cash buying company now, so you sold out, what were the first types of deals that you did?
To be fair, some of the first ones were just really run-down houses. So we were getting a lot of people, mainly landlords to be fair, at the start, that were selling us houses that they had owned, the tenant had trashed. Some of them were ex-drug dens, ex-brothels, you name it. So coming to us, and basically, because there wasn't a market for that kind of stuff, and they knew they would struggle on the open market, they weren't too, I'd say, optimistic about auctions at that time. This was sort of 2019, 20. So they ended up coming to us because that's naturally the kind of path you're going to get drawdown. Because think about it from your perspective. If you have a house, not necessarily just in today's world, but just over the last 10, 15 years, if you have a house and you want to sell it, if it's perfectly mortgageable, we've got all the time in the world, of course you're going to go open market. That's the natural way of going about it. You'll get 100% of the market value. If you have a house that's not mortgageable, but you don't have, let's say, on average, it takes 6 to 9 months to sell a house in the UK, 1 in 3 transactions will fall through. Let's just say you've got 2 to 3 months, you could probably go down the auction route. If you don't have that luxury and it's not mortgageable, naturally you'll come down the cash buying route. There's no other way really for you to be able to sell that property without taking significant risk or waiting for such a long period of time, and you'll end up getting disappointed. So for us, we understood that, we realised that. We end up targeting the landlord market as a first point of call. The tired landlords, the ones that had, a tenant trash it, those were the best ones for us, because the tenant at the landlord at that point had enough with the tenant. It probably took them 2-3 years to get them out. They just wanted to get rid of it. So we were buying stuff like that. We found that the Homes and the Hammer crew loved buying that stuff at auction. So the auction sales really work well where there's a value add from a refurb point of view. It's the easy wins for a lot of people.
Do you know what's funny saying that? I know people that are traders that will maybe buy something and purposely wreck it a little bit on the basis that people
works.
then see that, this is a fixer-upper, I can add the value, which is a crazy concept when you think that you actually make something worse to make it sell for more.
Some things are selling better at auction that are literally on the same street, but one's obviously trashed and one's actually done up. Done up properties, and this is a really good nugget for people as well, an arbitrage opportunity is finding stuff that's done up in auctions because it's not supposed to be there. So when you can find stuff that's mismarketed, and that's the beauty for us is anything that's not been marketed correctly or in the right place, that's an opportunity. So for me, that's something that we look at. The stuff that's all done up going into auction, people aren't interested in it most of the time.
Yeah, no, I literally, as soon as I see something more often than not in auction that's done up, I'm like, there's something wrong with this.
Doesn't make sense.
Like, that doesn't make sense. Like, it's either got no planning, and I think at a certain level you're scared because the stuff that has massive problems, that's just like, and now it's your responsibility. You look at it and think, that's probably not for me. But it is about opportunities, and I think because I'm like you in terms of I didn't have a property education background. My background before property was finance. But I didn't do the training courses and some of the stuff that a lot of people have the benefit of doing now. But then when I speak to people that have maybe been doing it for just as long or have like specialised in a specific area, it's funny that you find out that over time, just the experience, you create that knowledge. So like the last deal that I did was literally what you just spoke about, something that had been misadvertised. So it was being advertised as a 4-bedroom flat, just open market. It had been sitting there for 6 months. Nobody had bought it. A bit but overpriced. Rundown condition, a lot of tenants, so that high traffic didn't look great. It was only actually, I said, this is weird, that what's going on with this, that I looked at it, that actually it wasn't just a share of freehold it was advertised of, it owned the whole freehold and was the upper parts that had been used as 2 separate flats for the last 40 years.
Wow.
But they just weren't fully self-contained. So just refurbishing it, so it wasn't a conversion, it was almost a reversion back to what it was supposed to be, which meant no planning, which meant we could get it at a great price, get it been on the market, but it was a case of, okay, how has this been misadvertised and how then can you take that as an opportunity?
That's brilliant.
And I think it is about spotting those opportunities a lot of the time is where the money is.
And do you know what, like in my early days, we're talking about HMOs, the biggest arbitrage opportunity I found
Sorry, just explain arbitrage for people.
Yeah, so arbitrage is about basically if something isn't marketed or done in the right way, so i.e. you can take advantage of it by taking something and putting it somewhere else and be able to basically make a difference in the price, i.e. a lot of people talk about Amazon arbitrage of buying something from a shop and then putting it on Amazon for people's convenience, and it might be £10 in a shop, you put it on Amazon for £18. So you're basically making a margin based on what you can do, i.e. In that situation you're offering convenience for people. So in the early days when we were working in an area where it just got Article 4, as soon as Article 4 came in, the opportunity for us was understanding how to basically get grandfather rights, which basically means if a property is being used as a HMO prior to Article 4 being introduced, and Article 4 being withdrawing the rights to be able to convert to a HMO under PD, how can you normalise that?
Yeah.
Because it's been used as that for a certain amount of years, so you could normalise that. You don't have to go in for planning. We understood that. We understood you need to get tenancy agreements, council tax, all of this kind of stuff.
It's like established use application.
Exactly. Basically. But that created value where a normal house would sell for 120 grand down the street, on average in that kind of area. Basically a property with established use, or C4 certificate if you want to call it, would probably sell for about 170, 180. 50 to 60 grand difference just from getting one piece of paperwork. And that for me was just like, that was gold dust. So we were buying up properties that were advertised as 3-bed terrace houses where it looked like they were used as HMOs at once upon a time because they've got that kind of vibe to them. And you can tell there's like, well, you can tell when there's beds and mattresses and stuff like that in each room.
You see the van bed with the blue base and the mattress in the living room just sitting next to a chimney breast.
That's exactly it. And then what we were doing was we were contacting the agent at the time and just saying, look, we're going to proceed to this in legals, but it would be nice. So we weren't saying it was dependent on this. We weren't trying to alert them to it so they didn't understand it as well. So we're saying it would be nice if we can get this. By the way, we'd give the owner another £2 grand on top of the asking price if we can get this paperwork and stuff. So the owners were like, brilliant. So they were like, getting their old rent statements out, rent books, ASTs, etc. We were going and getting the C4 license, basically established use, and just literally arbitraging 40, 50, 60 grand difference and selling them. Yeah. That's an example of that.
That is for people that are still trying to understand what does the trading look like. It's being able to buy stuff, whether you're buying it because of a platform or process you've got in place through the cash buying business, or whether it's creating that value, but effectively not doing the actual development and very short term trading off property to make a margin. Correct?
Yeah. And I'll tell you what, because as property investors, so we've not got a development hat on, but as property investors, everyone's trained to never sell a property, right? Own it forever, die with it, all the rest of it. But then one of my, a guy that I worked with who owned a $30 million bridging company in the US told me once, a really clever guy, he said, Saif, everything's for sale at the right price.
Yeah.
Everything. We were talking off camera how one of your properties gone up in value at a certain level. At that point, it's for sale at that price because you 100%. Can't afford to keep holding that.
And I think that is something that I like, there's always things that become like, this is sort of like called mother's tales or things that you just hear growing up, like so stuff like debt is bad, do this, do that. But there is a middle ground and a happy medium in like everything isn't black and white.
Yeah.
And I think property is the same because there are a lot of people that, yes, if you look at the UK property market, over time, it has gone up considerably and at some points even exponentially. It's just an upward trend. But that doesn't necessarily mean that because the trend is like this, if you have the money and are liquid, your growth can't outreach the growth of just owning the asset. And I think it's about diversification. So it's great to have the asset as well as having cash sometimes, and it's a balance. But I've had this conversation with people all the time that, are the BRRR crew that, want to buy and hold the asset. But I think I always use this example. The last deal, that one I just spoke about.
Yeah.
It's London, so a couple of flats plus some additional stuff that we sold things for. It could have been 100% of money out, 250k profit at £1 million GDV, which means technically you haven't got any of your own money in there. But those two flats rent out for £1,700 a month. The mortgage would be 1,100, give or take.
Yeah.
So that's £600 per flat or £1,200 profit per month off £250,000 that you could release and go and work with. And even by the time you take into account the capital gains tax, even at £200,000, it's whether or not you think over the course of the next 12 months, how much money could I make with that 200,000?
Yeah, it's opportunity cost, isn't it? So
Exactly.
So being lazy with your capital is actually not a good thing as well. So buying a house, putting your 25% deposit down, but it going up so much in value and having a hell of a lot of equity is actually not a good thing. That's quite lazy. So I think you're absolutely right. In today's market, you've got to think, what's the opportunity cost? And we do that regularly. So even though we're talking about trading, we've got a property portfolio that we've built and scaled. And we do that every single year. We go through it and look at, what's the yield on the way in, but also what's the yield in today's market? So capital values have gone up, but obviously rents have gone up as well. But if the yield is not stacking anymore, we'd dispose of that and reinvest that money back in.
I think that's it. Until you get to the point where you've basically got unlimited capital, everything is there.
When does that point come though?
Exactly. Like even at unlimited, it doesn't.
Yeah.
But for you personally, that you get to a point where, in fact, to be fair, let me say that, not to the point you've got unlimited capital, but to the point where you're just mentally in a different stage. So I think I can't remember who initially said it to me, but the difference between wealth creation versus wealth preservation mode.
Yeah.
At the point in time where you're just trying to preserve your wealth, then just looking at yields and just, okay, is it preserving what I have? Am I not being eroded by inflation? However, at the point where you're trying to grow your wealth, then maximizing how efficiently you use your capital is really important, and benchmarking what one asset is achieving for you versus what the next best alternative would be.
Yeah, so I've got a principle, and whether I made this up or not, I don't know. So other people might have a similar principle, but this is a principle that I thought about. And the principle goes, how can you combine trading and investing together? Because, maybe you're a property developer, whether you like it or not, you're actually trading because you're buying and selling something. Yeah. But also you might be a property investor because you're holding stuff. And it's a really difficult mindset to balance. Yeah. A lot of people are like, we're either an investor or a developer. But the reality is the best way in order to try and start something is you need to earn your money. So you can earn your money through your job, you can earn your money through a trading business, whatever it is, that's how you earn your money. So I was talking about, I opened up a trading business, pharmaceutical trading business, that's how I earn. What I did with that money was then the next stage, so that's earn, then amplify. So I earned that money, I put that into property, and we flipped a few houses, traded a few houses, that amplified the money. Then I took that money and invested. Because if I went from earn to invest, I would have killed my capital and it wouldn't have amplified enough to become something significant. So for me, it's that 3-step model of earn, amplify, invest, basically.
That makes sense. You said that into the camera as well. Earn, amplify, invest. You've got to remember that one. I think that is an amazing gem. So what kind of deals, I guess it's hard because you don't develop as much. I know you do some developments, but because you're primarily a trader, I guess as developers, we have our favorite deal, the one where, because we got to see I like the kitchen, the bathroom. But have you got a deal across the line where you're like, that was creative, I like the way we managed to make that deal work? Is there something that you remember?
Yeah, so I'll be honest with you. I mean, and I look back at all this stuff as well. Look, as a developer, as an investor, you make money, and that's really, really good. And they got to a point where I wasn't driven by money. I was driven by enjoying what I do, because you have so many problems every single day, as we all do. If you don't enjoy it, you're not going to get over them, and you're going to kind of start to be hard on yourself. So for me, it's about a development that I enjoy doing, not necessarily about the money that I made from it. So the biggest thing that I really, really enjoyed doing was pre-lockdown, so 2019, we bought basically 2 cottages with a bit of land on the side, really run-down cottages, I mean, not inhabitable whatsoever, like the most run-down things I've probably ever seen. And we decided to buy that basically and take it on. And what we did was we restored that into one 4-bed house. So we did like this basically, insulation, rendered it, everything. So we literally took out all the floorboards as well. So you can see from floor all the way to, it was a really, roof went off, everything. I'd say that was probably one of our most challenging developments we did, but we learned the most of it. And it was one of those developments that you look back and you're like, we drive by it all the time. We're like, someone's living in there and they love it. And we're like, we developed that. Like, we were part of someone else's experience in terms of the house that they call home and they live in. So really, really loved that. And the lucky thing that we had with that one was because so it actually took us about 1.5 years to buy that. And you asked me why. It was a probate property. So 2 sons inherited it, but it wasn't registered. It was so old that it wasn't registered. So as a developer, for me, the risk was if we bought that and we had to go for first registration before, while we bought it, it would have taken too long if we needed to sell it. And I just thought the risk was too high, especially because COVID had hit at that point as well. So we asked them to basically register the title before we bought it, and they agreed to it. It took 12 months, just over 12 months to register the title, but they took that risk on their time frame. And then we bought it. And so by the time we bought it, materials had gone up, everything had gone up basically, because this was obviously all post-COVID. Luckily though, we did our numbers on 290 sales price, or 290, 300. We actually ended up selling it for 350 to a cash buyer. And that was an owner occupier who had basically been in rented accommodation for quite a while, saved up quite a lot of money, inherited quite a lot of money, and decided I need to buy, don't want to buy with a mortgage, and we had him as a cash buyer. That's
the other thing about doing stuff to a good standard of finish. Yeah. Generally you find that you just find a buyer that if someone falls in love with it, they make it work.
Yeah.
So down value on a survey, it's fine, I love the property. And some of the best deals I've done have been because you've done them to a really good standard.
Yeah.
And, done something a little bit niche, made it fun, like whether it's exposed bricks, whether it's, a kitchen that's maybe technically too nice for the area or for the value, but someone's like, look, I want that place. And I think as a developer, you can have those fun moments. And then also away from the money and actually getting those sort of top numbers and smashing ceiling prices, as you mentioned, the idea of just creating homes. So creating places where you can drive by, like you said, and see that I've just made actually a really nice house.
Yeah.
I think it's good to do projects like that.
Yeah, and also I think the problem is the people that are like penny pinchers, when you're trying to develop a property, you can tell where you've basically not done it to a certain standard. Like I walked into obviously this place that we've got here and I'm like, wow, like it's got the wow factor. And I think what I've deliberately done is, so I've placed in our businesses, I've placed different people in different locations. So my brother, who's our project manager, he's not money driven. He's all about pride. He wants to be proud of something. He wants to enjoy something. Yeah. So for me, putting him in that position means that he's literally going to create an unbelievable product, albeit he sometimes probably spends more than we want to spend, but he always makes sure he delivers a really, really good quality product. And that means we can sell our houses much quicker, much easier.
That's good. So that's your favorite deal. What about the biggest deal you've done?
Biggest deal I've done, believe it or not, so I'm a big believer in small amount of deals in volume rather than massive deals that potentially can be a massive risk for you. So I've not really done any £1 million deals yet, in all honesty. All of my deals have been 100 to 500 grand on average. But I think I was telling you about this off camera. So end of 2020, we completed on a 3.5 acre piece of land, had outline planning for 26 houses. It was on the market for about 1.2 million with an agent. Again, agent mismarketed it, put it way above what it was worth. No one even bothered to look at it because they were like, 1.2, I'm not even going to look at that. Yeah. It's probably worth more than 900 in all honesty, 800, 900. Probably had more than that at that time anyway. Then 2-3 years went on. they came to us through the cash buying company. This was post-COVID, just bearing in mind. There wasn't many people in the market for this kind of stuff. And they said, give us a cash offer. And I remember at the time, we gave them 475, just literally off the bat of, it was just literally, we looked at it and we thought, probably around 475 is where we would be. 500,000 we said, but we said 475 to build up for fees and stuff like that, and costs. So we gave them 475 and they said, yeah, but we need it done in a month.
Okay.
So we had to then go out to basically get that money. So it took us around about, I'd say, a month to complete on that. Now, we talk about cash. We were very open with them. We said, look, at the end of the day, we're going to be using bridging. The bridges that we got, though, we had a relationship with them directly. So we would call them up on the phone. They came to see the land. They were really happy with it. Basically, they were like, all we need is a RIC survey. If your RIC survey comes in and you're at 50% of the RIC survey purchase price, we'd give you 100% of the land. They lent us 100%. The RIC survey came in at 975. So we put nothing apart from the stamp, which is about 16 grand, I think, plus fees. We put about 30k all into that deal. We bought it obviously for 475. We sold it to a national house builder at 750. Just as it is, we did nothing to it. We just literally bought it and sold it. I think it took us 7 or 8 months from purchase all the way through to completion.
It's good turnarounds. And I mean, if you were to do your return on capital, it's pretty meaty there.
I would love a couple of them, but that was a one. I'll be honest with you. Sometimes being bullish when everyone else was quite fearful at the time works as well, and just be optimistic. That's the main thing sometimes.
That's good. I think so. We are getting on. We're getting on in time. Very quickly, what's next for you? What do you see like as sort of milestones? What do you want to achieve?
So I think the next step for me is we've got to a position where we built our portfolio. We're probably at 70 houses in the portfolio. We've sold about 50 in total from our properties that we bought. We're getting to a position now we want to continue to organically grow it. But I think what we've now started to do is basically try and say, right, if someone wants to build a portfolio, we've got all the ingredients. We've got the cash buying side of things. We've got the property management, the construction. So we're now starting to help people build their portfolios out as well. What I've really liked about this whole process of going through it is meeting new people, speaking to people, and almost trying to create a strategy for them, which basically is their pension. A lot of these people are working in London or basically sold businesses, whatever. They're now at a point where they need to invest their money. So what do I do with it? So meeting them has been probably the best thing. Just meeting loads of different people and just enjoying the process. Like, it is stressful. So sometimes taking time out of the business to go for a dinner or lunch or whatever is quite cool.
It's nice. So for those that are listening to the podcast, where can people find you?
So I'm on Instagram. So on Instagram is SDGB Properties or Saif Derzi. I'm on Facebook and LinkedIn as well.
Nice. That's very good. Before we let you go, the last thing that we ask everybody is, if I'm 16, 17, 18, maybe I'm even mid-20s, but I don't really know that much and want to get into property, what advice would you have for someone?
So my now business partner came to me when he was in his first year of uni after a networking event and said, I just want to work. He heard me speak at a networking event. He said, I just want to work for you. I'll give you my time for free, basically. And that's all he did. And I taught him a lot of things, but he gave a lot of his time for free without asking for anything in return. And now he's a business partner. We manage over 300 units in the lettings company. So for me, it's about trying to give a lot of value without expecting anything in return. And that will reciprocate back to people, basically. So just find someone that you admire, find someone that you really want, and see how you can help them, because then they'll help you as well.
That's it. I was thinking about this the other day, and I was like, a lot of people in property are not of the millennial Gen Z. If I was to give somebody advice right now about how could you facilitate that relationship, I would say that work on either your editing, your videography, or your social media, because the majority of us haven't got a clue around that area of things. And if you can come on, because everybody wants a presence now, and be like, look, I can be your social media manager and be great at it, or I can be your editor or your videographer, but I want to learn about property. Those two trade-off of skill sets are generally two people that have no clue about the other.
That is brilliant.
So it is a great way in. So I'd consider that. It has been a pleasure having you on.
Thanks a lot for having me. Really enjoyed it.
Will be in the description, in the bio. Obviously, you already know all the good stuff. If you haven't subscribed, catch all these episodes for free. Have those notifications on and like this video, and we will catch you next week.